detail about what's going on there. Anthony Landahl joining us from Equilibria Finance. Anthony, good to see you. Interest rates. What interest rates? What's going on at the moment? Why are we seeing these sustained increases in housing prices?
Yeah, the housing market is resilient. It's rising, while interest rates are. For the 3 months from February this year, we've seen a 2.3% increase nationally. From May 22 last year, when rates started rising, the market dropped 9%. It's now risen for the third month in a row. I think it was back in the early 2000s through the mining boom that we last saw behaviour like that, where we had a rising interest rate market and the housing market was defying that and remaining resilient. So we're back in a growing housing market, as you noted in the introduction there. I think the underlying reasons for that come down to supply and demand. We're seeing a lack of supply. Listings are down 15% for the year. Listings are down 24% over the 5-year average, and we're actually seeing an increase in demand. And part of the reason we're seeing an increase in demand is due to competition being concentrated in the areas where there's listings. So there's becoming a little bit of urgency in the behaviour of buyers coming back into the market. And we're also seeing migration increasing, and people are seeing people coming into the country are looking at buying maybe now as more attractive than renting because of the tight vacancy rates. So particularly in the capital cities, a lot of the growth's been driven by the capital cities. We're seeing that third month of increases in house prices again.
So given that strength we're seeing, particularly being driven by immigration, then is it likely, with the prospect perhaps that interest rates could go maybe another 50 basis points higher, that prices will still keep rising?
Yeah, tricky question. I think we probably have got another 50 basis points. I think we talked a few months ago, and I don't think either of us were forecasting that. But we're now looking at a cash rate, maybe another 50 basis point. Our cash rate's still lower than some of the major international economies, so there's a bit more to come, I think. Look, the fundamentals of we got a structural problem with our housing market around supply, and I think fundamentally we're going to keep seeing some growth in the market. We've got a tight employment market, which is helping buffer some of those interest rate rises. We have got the fixed rates coming off. We're not seeing a lot of defaults at the moment. We're seeing some of the banks now starting to adjust their assessment rates. CBA announced that this morning for refinances if they meet certain criteria. Westpac are doing it. I think we're going to see more of that for those so-called mortgage prisoners coming off the fixed rates. So I think the fundamentals of the housing market are that we're going to continue to see some growth. I don't think we're going to see that big drop-off that was forecast. Some were forecasting a 20% fall. We've had 3 months of growth after about a 9% or 10% drop. So I think we're going to see continued growth.
Well, what sort of churn are we seeing among mortgage holders at the moment as they look to refinance to get a better deal as those rates continue to rise? And as you point out there, now the bank's being a little more accommodative just as far as those buffers are concerned.
Yeah, refinancing is at record levels. Investor flows are down 30%, owner-occupier flows are down about 25%. Refinancing's up about 40%, and that's driven by a lot of people coming off fixed rates, or it's also driven by people who might have had a low deposit to start with. Now they've got the value in their home to look at a more mainstream provider. There's a lot of competition in the refinancing space. One of the problems has been the large buffer rate, as you just raised, of 3%, where effectively you couldn't move someone to a better rate. But refinancing activity is very busy, as is a lot of repricing with existing mortgage holders. Our advice to anyone looking at their interest rate is talk to your current provider and see what they can do, then take it to market to see what's available. A lot of providers are repricing existing rates, same as new to business, to retain the business.
You mentioned those depressed investor flows. What are you seeing with investor trends at the moment, and what's it going to take to get investors back into the market?
We're seeing caution effectively. 6 months ago, I think we were sort of looking at the investor market thinking it's quite an attractive market. Prices were falling at that stage, rates were moving, and we had a really good rental. Well, we had tight vacancy rates. So from a landlord perspective, there was a lot lot of reason to think it was an attractive market, but there's still a very cautionary approach. And I think the main cautionary approach is the cost to fund is becoming more difficult. What they might have been able to do 6 months ago is not being able to be done. The other thing is the cost to hold properties is really impacting some decision making now. Those inflationary pressures have been flowing through obviously to investors. And I think from a landlord perspective, there's a little bit of uncertainty around both state and federal government policy around essentially a free market with rent, because vacancy rates are so tight. There is talk in some states of some sort of capping on rentals and stuff like that, which flows through to the sentiment for investors. So it is a pretty cautionary tale, and those investor credit flows have stayed low.
Have you got a read on what foreign investors are doing at the moment, whether they're sort of turning their attention to Australia again?
Yeah, that's a good question. The answer is yes, they are. Foreign investment is actually up in terms of inquiry as distinct from activity. I think the first quarter of the year, foreign investor inquiry in terms of real estate was up around 30% on the previous 12 months. So they are looking back into the Australian market, whether it's to invest for their family to live in or whether it's as an investment. Foreign investment inquiry, we're yet to see that, I guess, flow through to activity, but that has increased.